Here is the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So as we can see here, we have the 2-hour price chart. We're going to try to take a step back a little bit here, a little bit of an intermediate term time frame. And as we can see here, share prices have completely exploded past prior resistance zones. This is very important because what this means is that we did manage to find support at key areas here, right into this 38.2% Fibonacci retracement zone. Incredibly predictable. This chart is really obeying the technical signals here very, very well. And what we're seeing currently now is this explosion higher in share prices above that $5.70 mark. So, the prior projection here that we were on the verge of rocketing higher or exploding higher. I mean, whichever phrase we want to use here. Clearly, this is starting to occur, and these price gaps are now forming on the top side. Rather than forming on the downside. So anybody that has been entering into this stock recently, based on these prior videos that we've been doing, and trading against that $3.60 support zone, you can really pat yourself on the back here because if all you have to do is look at the history of this stock. I mean, just look at the massive, price declines that have been seen longer term, and we can just go out for a moment here and take a look at those as well, because, overall the history. There's a very rocky history here for this stock. Most of the people that have traded this name, have been in major trouble because there have been so many trading recommendations that have been made for NIO at really terrible levels. We can point to specific examples here. Meet Kevin was recommending the stock, at extremely high levels, and all that we saw here was a share price movement in the negative direction. So, now that we've been covering this stock and looking for a bottom here, these price movements to the top side are much more difficult to project and to predict than it might seem. All we have to do is look at the longer term history here and see, the huge number of trading situations here that people have fallen into that have been trading underwater. But if we actually look at the price charts themselves and not just simply buy into the hype, Meet Kevin was telling people to buy because there was the IPO that was coming up. He's telling people to buy the stock and to watch the stock. And then, that went all the way up into the upper 60s, still telling people to buy the stock. And, the share price just completely collapses from there. It was a nightmare. So, but if we actually do the work here and we pay attention to the chart patterns, these types of reversals do become apparent. They become obvious. You just have to do a little bit of work. I mean, spend 5 or 10 minutes staring at a chart. I mean, I understand it's boring, but a lot of heartache and monetary loss can be avoided if we simply do that work. So, as things are currently, what we're looking at here is a near-term high coming in at $5.89. This is, as I said, very significant because we have now broken above this $5.70 area. And this has now established a very strong foothold here right above this $5 mark. This is important because, what we're looking at here was this 38.2% Fibonacci retracement. We've been calling this area for a while here. And as you can see, this is exactly where share prices found support. So, it's not a massive mystery here. I mean, we're really not, we're not trying to predict the future here. We're just erring on the side of probability. What do the probabilities actually tell us? And then if we just scale into positions in a conservative way, and prepare for potential downside, it becomes much easier to avoid these massive losses that these, larger YouTubers really force people into. So, I do want to sort of take a step back here to this 2-hour time frame, because what we can see here is that the indicator reading still suggests that there is positive momentum underlying this stock. In addition to that, what you can see here is that even with this rocketing price movement higher, we're not yet overbought. So we have not yet reached overbought territory in the relative strength index on the 2-hour time frame. So, we're close. I mean, let's not get, too excited or hopeful or anything like that, because we are moving right into overbought territory here relatively soon. And then in addition to that, we have a very key, very important longer term resistance level that's not very far away here. So, Yes, we have seen some very impressive price movements here, but I do want to, kind of discourage people from getting too excited and just expecting share prices to move back into those, $60 areas, because we do have to look at this in a measured, conservative manner. We do not trade based on hype. We trade based on probability and protective trading strategies. So, there is still positive momentum here. We're not yet overbought, but we're heading there very close. And if we sort of pull out on this price chart a bit, the fact that we are trading close to overbought territory is very interesting here because that price movement to the top side. Reached $5.89. And then here, what we're looking at here is this major level of longer term resistance. We can call this a double top pattern at 601. You can also call that sort of a tweezer top pattern. I would probably refer to this as a double top because this, if we sort of drill in here, we can see that there's a price candle here that has a full body that extends into this area, whereas this initial, spike high here does have a wick on the candle. So I would refer to that more of a tweezer top if we were to see two of these. But we're seeing sort of a mixed picture here at the moment. So in either case, the proper way of looking at this is that this is an area of double top resistance that could be a key inflection point for this stock going forward. I want to guard against, getting too optimistic here because we are moving right into a very important resistance level at this point, just as share prices are ready to start to move into overbought territory. So yes, we're rocketing higher here. That is the case. All of those projections have been true, but there is some caution here, and there is also nothing wrong with either taking profits on a position. At least if you're a short-term trader, there's nothing wrong with taking profits here, or at least taking some of the position off of the table, taking some of those gains. So, for example, I'll just throw a strategy out there for anybody that's long on a shorter term basis. So, for example, one common strategy would possibly be to take profits on half of the position or a third of the position in advance of this resistance zone, and then move the stop loss for the remainder of the position to the break even point. Okay, so for example, if you bought in at maybe 450 or $5 or something like that, you can take profits on some of the position and then possibly move your stop loss now to the break even point, so that at the very least you can't lose any money on the remainder of that position. So here's the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.